So by the end of this video, you'll be able to know exactly how to buy stocks in Singapore. And if you're overseas, some of the tips here can also apply to you. And make sure you follow these step by step. Don't skip any of the steps, okay? To buy stocks in Singapore, the first thing you need is to have a brokerage account. Not only that, you also need to have a bank account and of course, capital. Now, there are two main types of brokers in Singapore, okay? The traditional brokers, so-called the old school brokers, which requires you to open a CDP account. Now, what is a CDP account? Basically, CDP stands for Central Depository Account. And to put in simple terms, it helps to keep the shares that you have bought, and is managed by the Singapore Exchange. Let's say a broker like DBS, Vickers, you need to open both a CDP account and a brokerage account. And the second type of broker is more convenient for beginners, and that is custodian accounts. So what is a custodian account? Meaning that the broker would hold the shares on your behalf. And when you choose a broker in Singapore, make sure that it is MAS regulated so that your funds are safe. Also make sure that they offer zero commissions for trading and investing into stocks, both US stocks and Singapore stocks. And very important, especially if you're a beginner, make sure that the platform is user-friendly, because I've seen some platforms not so easy to navigate around. And better yet, the broker has to allow you to trade both local stocks, Singapore stocks, as well as overseas stocks. For example, US stocks. And one of the local brokers that I like using, that's very popular among Singaporeans. In fact, I've heard somewhere 1 in 2 Singaporeans use this broker. And this broker is called Moomoo. Now, I'll put the link in the description below. I have a very special reward for you where you can get NVDA stocks for free and enjoy rewards of up to 1,120 when you sign up with my code. Okay, so what you need to do is just go to this search bar and then type in special deposit. And once you've done that, then you press go and then key in my special code Karen1 and you'll be able to receive special rewards. So once you've downloaded the platform, once your account is approved, which wouldn't take very long, you can go to your stock trading platform and then go up to the search bar to search for the stocks that you want. I know there are a lot of stocks out there, but as a beginner, start with what you are using. And the good news for investors is that Moomoo has recently launched Moomoo AI. And once you tap onto the AI button over here, you can ask Moomoo AI any investment related question. Let's say if you want to ask Moomoo AI, is DBS worth investing right now? And when you key in this prompt, it's going to analyze all the most recent news, most recent developments of DBS. It's going to tell you the summary and the key factors to evaluate. And when you have evaluated that DBS is a good buy, it is at a good price, okay? Don't just buy anytime you want. All you have to do is just tap buy, and then you gotta enter how many shares you want. Now, for Singapore stocks, you need to buy at least 100 shares. So a lot of people ask how much capital should I start with? Now, there's no minimum requirement for Moomoo because it depends on the share price, what stock you want to buy. Let's say you want to buy DBS, just take the stock price times 100 and that's the amount you need bare minimum. So let's say you can only afford 100 shares of DBS. Then now you gotta choose your order type. Now there are two types of orders, market order, limit order. To put in simple terms, market order just means that you want to buy at the current price. Not later, not tomorrow, right now. The downside about market order is that when the price is very volatile, you might not be able to enter at the price that you like, because sometimes the moment you enter, price spikes up, you enter here instead. Whereas for limit order, you preset a price that you want. Okay? So when the stock goes down and hit your price, it's going to get executed. Downside is that if the stock doesn't go down to hit your price, it goes up instead, your order wouldn't be executed. So pick the order that suits your own trading style. Aside from all these things, you also realize that there's one more thing you need to fill in, which is the time in force. Now there are three main choices: day, GTD, GTC. If you're putting in a limit order, you can use day time in force. But if you want to set a TP target and a cut loss level, then you gotta opt for GTC. But if you're not in a hurry to buy the stock, you can also set it as GTC, okay? The good news about all these features, if you're not familiar with all these, how does it all work? You can always practice using a demo account on Moomoo. Practice until you're proven to be profitable for the past 6 months. So this comes down to the second point, which is to understand the basics of stock market, especially the Singapore stock market, and how is a typical Singapore stock different from US stocks. Now, there are a lot of things you need to learn when it comes to investing in the stock market or buying stocks for trading, but there are two main pillars of knowledge that you need to learn. First one, fundamental analysis, which involves analyzing the business, analyzing financial statements, analyzing financial ratios, analyzing valuation. And if you use the top-down approach, okay, you also need to learn the macroeconomic factors, the economic indicators, central banks' interest rates. And this is more if you are investing long-term. Even for trading, if you're trading long-term, you'll be focused more on fundamental analysis. Whereas if you are a short-term trader, then you will need to learn the second pillar, which is technical analysis. This involves studying price action on the chart. Indicators, you don't want to learn too much because otherwise you stuff your whole entire chart with random lines, indicators, and then your whole entire chart would look like Spider-Man just came and do his thing and then left. And a lot of stock traders also use volume. There's no need to learn too much about indicators, fancy indicators, because a lot of them, they are lagging behind the price. As a start, just try to master candlestick patterns, chart patterns, okay? To analyze which stock to buy, so this comes down to third step, which is choose a good stock. But that should be the final step because you gotta make sure that you buy a good stock that can earn you money in the long term. And there are two main types of stocks, okay, that can earn you money in the long term: dividend stocks and growth stocks. So even in the Moomoo app, you can use it to analyze the financial performance of a particular stock. Make sure that the stock has strong financials, steady earnings, and has a strong competitive advantage. Make sure to check the price to earnings ratio, even though it's not super representative. Just make sure that it's not overpriced, okay? You don't want to have a P ratio of 100 times, which is crazy. Check whether the stock pays dividends, especially if you're looking for dividend income, regular interest payments. Make sure the dividend is at least 4%, payout ratio less than 80%. Also make sure that the company has paid their investors consistent dividends in the past 5 years. You don't want it to be like, I pay you this year, oh, next year I'm not paying you, sorry. Then third year it's like, oh, here's your dividends again. You don't want that, okay? And there's a lot more things you need to analyze when it comes to picking a good stock. I've already made a video on this. But most beginner investors in Singapore, they start with STI ETF because it doesn't require much analyzing. But if you really want to pick individual stocks, a lot of beginners, they start with blue chip stocks, defensive stocks, like the few big banks in Singapore. Some people even buy the local telcos. And if you don't have enough capital, you can choose the cheaper stocks, okay? Or you can opt for trading US stocks. You will be subjected to withholding tax, and also you need to convert your SGD into USD, and you can do that within the Moomoo platform. And bear in mind, when you convert SGD to USD, there's going to be some fees, and you'll be subjected to exchange rate risk. So then a lot of people ask, then what portion should I put into SG stocks? What portion should I put into US stocks? Now it depends on your age, income goals, but a general guideline, you can opt for half of your portfolio being US stocks, half being Singapore stocks. But if you want to be more specific to your age, okay, just take 110 minus your age. That will give you the percentage you need to put into stocks. If you're more conservative, then you put more into Singapore stocks. If you want more capital gain, okay, then you put slightly more into US stocks. Now the next step you need to take is to monitor your stocks. It's not just, oh, let me buy and then just sit back, relax, do nothing. You can monitor it regularly. Now the frequency of monitoring will depend on whether you are a stock trader or stock investor, because if you're a stock trader, you'll probably need to check every day. Whereas if you're a stock investor, you can just check like once a week. And if you want to cut down the amount of time you monitor your charts, you can preset take profit targets, preset cut loss targets. If you're a long-term investor, make sure that your strategy is value investing, which is what I use. You can make sure that the stock did not go beyond your intrinsic value, because if you don't check it at all and your stock become overpriced, okay, it might just tank big time based on one bad news. But also with that said, there are some investors who are momentum investors, growth investors. They don't care about intrinsic value because their rationale is this: if the stock has the potential to grow its earnings, it's going to continue to go up. And as long as there's another seller who is willing to pay for my expensive stock, then I'll continue holding on to it. Basically, you just need to find a greater fool to buy your expensive stock. Nothing wrong with that, it's just more risky as compared to value investing. And the good thing about investing nowadays is that a lot of the latest updates of the stock that you're holding onto, it's all placed within one single platform, because if you look back at Moomoo platform, they have all the relevant news that you need to know, keep up with in just one app, one platform. You don't need to separately go to Yahoo Finance, for example, Google Finance, for example, Bloomberg to check what's happening in the stock market, what's happening to your stock. And if you're a long-term investor, try not to become obsessive about it, like checking every day, because when you do that, you would have this urge to sell at the wrong time. And during a market crash, if you hold on a good stock, if you have a good stock that crashed too, make sure you don't panic sell, just like the 90% of Singaporean investors. If your stock is a great stock, lasted for the past 20 years, chances are it has survived the past many recessions and still continue paying out dividends despite a recession. Those stocks, please hold on to them. But of course, if your stock is bad, there's no reason to continue to hold on to them, because sometimes certain stocks crash for a good reason. So again, if you want to start your investing journey today, trading journey today, I'll put the broker sign up link in the description below, and let me know in the comment section below what is the favorite stock that you have bought. I'll talk to you in the next video. Bye.